All right, let's get into an example here. You've got a chart up in front of you. Let's take it from the very first step. Now, when you look at this chart, you have no lines, you have no trend lines, you have nothing on this chart right now. What's the first thing that you do when you look at this chart and begin your analysis?
Well, the first thing I like to do is I like to go to the monthly chart, okay? And I want to look at the bigger picture, right? So you can see that, you know, well, obviously the trend has been down for some time, right? And prices, you know, approaching this low. And I should also mention too that, you know, the markets are all about liquidity. It's like the market is going to go after where liquidity is at. And places for liquidity are going to be below old lows and above old highs, right? That's where the liquidity is at, right? And because
hold on. For those who don't understand what liquidity is, can you explain what liquidity is?
It's basically, where's the money?
Okay.
Show me the money. You know, it's, well, I'll show you the money. So as price was approaching these lows right here, right? Price was looking for the money, and the money is going to be sitting down below these lows. And because this is a Onda Forex feed, I like to look at where the bodies accumulate, right? Where the opens and the closes accumulate. And this is why I think opens and closes are more, are much more significant than lows, because these lows can be created by the brokers, right? The highs and the lows. It's where the bodies, you know, so for example, so you see, if I were to draw a line, or if I just use my crosshairs, you could see, right? That area right there, you see, look right here.
Yeah.
All the liquidity was sitting right there below those bodies, right? Just right there, but accumulation of bodies, right? So that's a very significant area. Now, if I were to draw a line chart, well, you would obviously see these areas would be pretty closely lined up, right?
Okay. Now, one point about liquidity is that what you're saying is that there were a lot of people who entered long positions at that level, and if price dipped below it, that's probably where their stop loss was. And
right.
that's what you're saying. That's where the liquidity was that people wanted the banks and the other participants, large participants in the Forex market at least.
Right.
That's where they want to take people out of their positions because they know there's money sitting there.
Correct. So liquidity in the form of, in this case, sell stops, right? Sell stops. What is a sell stop? A sell stop is basically an order to take you out of a long position. So if you got lucky right here and you got in right here at this low, right? So I think the moment so if you just look at this price structure, right? You had this high sitting right here, price broke the high. Anytime you see price breaking a significant high, because it's a monthly chart, well, you're going to get a retrace. It's more than 90% of the time you're going to get a retrace. Notice I said more than 90% of the time. So that's another thing too. It's like when I see a break of a significant high, I always expect some sort of a retrace. So price broke the high, and then what did it do? It came down, and it was more than almost 100% retrace, because that was the low.
Gotcha. Right.
So anybody who got lucky here and got into this, right? Well, where are they going to put their stops at? They're going to put it down at the area of support where they see support. So this area was showing support. So yes, so again, for a long position, for a buy, you're going to put in a protective stop to cover that long position, and that is a sell stop. And so when price comes back to that area right here, and notice it didn't breach it. If your sell stop was sitting below here, well, then you were safe, and then you enjoyed this trip up to the next area of liquidity, right? So because if you think about it, before this high, well, where was the next high? It was up here,
right?
Right. So we could probably assume that there was a lot of accumulation in here as well, but that's for another subject. But
okay, so the liquidity is really at the old lows. That's where they want to push price down so they can take people out of their stops and gather up those long positions. And at the highs, the previous highs, that's where the sell stops are in potential short positions that they also want to take out so that they can liquidate those positions on traders who are potentially short. And
right.
Okay,
buy stops actually, they're going to be buy stops sitting above old highs, and sell stops sitting below old lows.
Right. Okay, gotcha. All
And
right.
that's how I look at the market. And so when I go into any chart, whether it's on a 1 minute chart, whether it's on an hourly, whatever, it's like I always ask myself, where is the liquidity? Where are the buy stops? Where are the sell stops?
Okay. And so you start with the monthly chart. So why don't you go ahead
Yes.
and kind of go step by step through how you would analyze the monthly?
So clearly, I look at the parent structure, so we could see. So if you just understand structure, so where the active high that price is trading in is here's the active high, here's the active low, right? So if we were to draw a box from this top down to this bottom, well, and if we could make all of this just one candle, well, that's going to have a high, it's going to have a low, right? So this is the trading range that price is currently trading in. So I know what the parent range is.
Okay.
So, and the reason why, so then what I do is I say, okay, where's the parent range? Okay, so so then you've seen me do this. So I'll take a box like this. It's called a GAN box, and I'll put you're going to see all my drawings come back because I had them hidden. And I put this GAN box on here. We can call it a quadrant box, GAN box, doesn't matter. But as you see, I have 25, 50, 75, right? So 4 quadrants, all broken up into 4 equal parts. So I want to know the quadrant price is trading in, right? Because each one of these quadrants are going to, of course, have their own respective equilibriums. And so I want to know where equilibrium is. I want to know the quadrant we're in, and I want to know where equilibrium is.
Okay, now what is, okay, so I'm not familiar with the term equilibrium. What do you mean by equilibrium?
Right, so if I pull this out like this, and just measuring from the high to the low of the parent structure, right here, right? So from the high to the low, equilibrium of that range is right here, okay?
At 50%.
Yeah, 50%, right?
Okay.
So I want to know where 50% is at. So because why? Why do I want to know where 50% is at? Well, everything above 50% is considered premium, where price can be sold, and everything below is considered discount as it relates to the current structure we're in. So you can see that we're down in this structure right here. Or excuse me, we're down inside this quadrant, way down below the 75% area of the entire range, right?
Okay.
Very simple. This is the quadrant we're trading in, okay? And you can see, if I just put my crosshair, we are roughly right at, see where my crosshair is at? It's equilibrium. Well, notice.
So it's 50% of that lower quadrant.
Correct. So if I do if I put it on a horizontal line like this and just kind of eyeball it right about, let's see, right about there. It doesn't have to be perfect, but that's pretty darn close.
Yeah, that looks good.
Mm-hmm. And if I go over here, well, what I just explained, that everything below equilibrium is considered discount. And that is where price basically bounced from right here. You can see now I got my arrows and stuff, as you can see, but the price point is 61.46, roughly 61.466. Okay.
Okay.
So if we were to round that off and make that precise, well, algorithmically that would be 61.5, right? So 61.5. If I were to round it off, I bet you that's probably closer. So price is coming down to that level. So what do we say? 61.466, right? So we will. So 61.5, right? About close enough. So you see, the price had breached down below the quadrant equilibrium, which is between the low of the parent structure, and it's down at the 75% of off the bottom, and you can see that's roughly where equilibrium is at. Well, price came there, and so see how it reversed?
Yes.
So that's why I want to know. So okay, so now that I've explained that, so that's what I do. I want to see where price is trading at.
Okay, so the equilibrium to you, if it's above that level or it's below that level, does it have certain significance? So the equilibrium is 50%, But what's the significance of the 50%? Are you saying that it's above? If it's above that, it's a strong. It's a stronger market, and if it stays below that 50%, it's a weaker market. Or how do you use that in your analysis?
Yeah. So basically, I want to know the parent structure, and I want to know the current parent equilibrium. So in this particular case, yes, this is the parent equilibrium of the structure, but you can see we are nowhere near that, and price has been nowhere near that on this time frame since December of 2018.
Okay.
So we are way down here in this quadrant, and that is currently the equilibrium that is in play.
Okay, so the 50% level of the parent, the big move here on the monthly chart, when it starts trading below that 50%, if it can't hold that 50%, are you saying that that is typical of the weakness in the market, and it will probably continue to go lower into lower quadrants? Is that what you're saying?
Not necessarily. I mean, yes, price currently on the monthly chart is in big discount territory right now. So I would say that anytime price goes below an important equilibrium, when it's already in a deep discount in terms of this higher time frame, right?
Okay.
I'm saying that the buy opportunities are going to be highly probable.
Okay.
Mm-hmm.
Okay.
Because we're already below. Look, you see how we're already below.
Right.
And then if we were to take, now if we wanted some confluence, right? So if we wanted to just say, okay, well, because you understand the fractal nature of price, we could also take this low up to this high, and we could draw a fib, and we can see that, and we can notice that if we were to use traditional Fibonacci levels, we're probably sitting somewhere around, to me, it looks like somewhere around 79%. Let me see if I'm right.
Well, from the high to the low, that looks like it would be down, probably a 70% discount, maybe 78%.
Right. So I like to use a. Okay. So yes, we are below 79%. This is, you're going to see 88.6%, somewhere around here too.
Okay.
Custom fib levels. So there's equilibrium of the quadrant right there, right?
Right.
So when it was getting down to this point here, I mean, you're talking deep discount, right? Price can be purchased at a deep discount, and while everybody's selling, that's when I think, when the general public, or you can say the lesser informed, not excluding smart money institutions, when everybody's selling, they're buying. It's a total opposite, right? Because if you think about it, right, they have to skillfully and smart money institutions, right? They're not interested. They can't just go into the market like us, right? And just go, click a button and enter the market. Say, oh, okay, I'm going to go long. I'm going to go short.
Right.
They have to very skillfully put their orders into the market without moving the price too heavily, and accumulate a large position. So they have huge positions to fill. And, so you're probably so if we were to go down to a lower time frame right here, so let me just go ahead and put that equilibrium back in there. And if we wanted to actually find it precisely, we could just go like this.
Right. So you just kind of scrunch it up, put it into that lower quadrant there, and you'd be able to get that 50% level.
Because I do like precision, but so there we go. We'll just put that in there like that. Okay. So now we'll go over here. So now I know where we're at. Now I can go to the daily chart.
Okay. So you start with the monthly. Now you're going down to a daily. Would in your daily or typical analysis time that you do analysis, would you go down to a weekly, or then you would just go right down to the daily?
So I would normally I look at the weekly too. I mean, I look at various time frames, right, to kind of get my bearings of what I think is likely going to happen. But the daily pretty much has everything on it that I would need to determine the likelihood of a price move.
Okay.
But now that I see why this happened, see what this does is, for me, in my mind, it tells me why this happened, right? And so there's logic. So in other words, we were at a deep discount, right? Notice how price had come down to it on the daily bar, and it just stopped roughly right there.
Wow, that's amazing. Yeah.
Mm-hmm. So some people would say, well, the reason why it stopped is, I was looking at this indicator here called the stochastic or RSI because it was oversold. And I'm like, well, okay, but I just like to look at the parent structure because that's the underlying current of the market.
Okay, I think you just said something really, really important right there, and I just want to make sure that I understand it and everybody who's listening to this understands it. And that is that, from what I can tell from what you told me over the last few months, your analysis is strictly price. So you don't use, indicators. Where do indicators come into your analysis, or don't they come into your analysis? Besides these equilibrium levels and other tools to measure the quadrants, do you use RSI? Do you use MACD? Do you use stochastics? Any of that?
Yeah, I like to look at the RSI because I like to see what other people are looking at. And yeah, it's interesting stuff, but, again, when we throw everything on the table, it's like, well, why did this happen? Well, it wasn't because of the indicator. It was because we were at equilibrium, a very important equilibrium, like I just explained.
Okay, so it's something that you like to look at, but it's not a major percentage of your analysis.
No, as you notice, the only indicator I have on here right now is ATR, which stands for average true range.
Right.
And the average true range is a mathematical. It puts the math in your favor, and I have to give credit where credit is due. I get this from No Nonsense Forex VP. He convinced me that ATR is probably the best indicator you could ever use.
I agree. I like it too because it shows whether or not it really is. And I put it on the VIX just as an aside note. I put the ATR on the VIX because it looks like I measure the volatility of the volatility.
Yeah.
But I do like the ATR as well.
Yeah, and just in a nutshell, it's one of those things where it helps you to determine where to get out. The expansion of the weekly range, because that's another thing too. As I say, okay, as I go into a chart, every week there's going to be a range that price is going to move in, and the ATR just gives you the average of that, what you can likely expect, because it measures the last 14 week periods, and if the range has been, say, 100 or so ticks or points in a market, or pips in Forex, then I would aim for about 50% of that. In other words, I wouldn't get greedy and try to get the whole, possible 100 pips that price could move for that particular weekly, for the weekly range.